Here to deliver a commercial for you. I try to advertise to think big. I really think this is very, very necessary and will make the difference. Unprecedented scalability of new business models based on new current technologies have led to an ever-increasing concentration of growth. It has become more and more a guerrilla's game in which Europe so far hasn't hardly participated. If we look at public capital markets, S&P 500 has been on par with the Euro stocks up until 2010, and in the last 15 years it has outperformed the Euro stocks by 3x. But if we take out the famous Max 7 plus Visa, Berkshire and Lilly, that outperformance is entirely gone. In fact, the broader market in Europe has outperformed the US market. For me, it is obvious. Our inability to create very large, fast-growing tech companies is the root cause of our relative wealth decline. So immediate question, what are the reasons? I give you 3. And it starts for me with our lack of ambition. We Europeans, I'm convinced, are way too humble. We actually open a bottle of champagne if we have reached a unicorn valuation. And should we have created a decacorn, we try to take our money and run. We just go and try to find an exit. But that does not make the difference. We have to write our winners to really make a difference on an economical, on the country level and the global level. We have to create multiple Centacorns, because the math is pretty simple. If we grow a unicorn by 100%, we create 1 billion. If we grow a decacorn by 100%, we create 10 billion. And if NVIDIA grows just by 20%, 1 trillion of wealth and value is created. That is what makes a difference on a international, on a country level, on the economy level, not creating unicorns and Centacorns. By the way, and I come to that a little bit later, we as investors are in that regard part of the problem rather than part of the solution, so far at least. So this is number 1, lack of ambition. Number 2, I see an increased cost, what I call a cost of experimentation. Innovation needs freedom to operate and actually minimal cost of experimentation. Early and strict regulations are increasing these costs of experimentation and reducing the freedom to innovate and to operate. I'd like to give you a very painful example where we have lost quite a bit of money, and I know you know that example, and that is Lilium. Lilium has been an eVTOL startup close to Munich, Oberpfaffenhofen, collected 1.5 billion euros to get an aircraft done, and it failed at the tail end of its development to secure the last bit of necessary growth capital, anything between 500 million to 1 billion. Still a significant number, but after 1.5 billion of secured investment, that was impossible. So in the first place, that seems to be a lack of growth capital here in Europe, in Germany, and that is to some extent true. But underneath, the true reason for failure was a different one. That goes back to a decision of the European Air Regulatory Authority, the EASA, decided 8 years ago to only grant a full certification to Lilium eVTOL if it is matching the same security standards as an Airbus, 10 to the power of -9. In fact, Lilium has been a tool which would be replacing not an Airbus, but a helicopter. And everybody knows that helicopters are way less secure than an Airbus. So in order to get a helicopter certified, the EASA is willing to grant that certification with a security 10 to the power of -6, 1,000 times more risky than an Airbus. You may or may not know that. I'm an aerospace engineer. I know what I'm talking about. Helicopters are dangerous. So now we come up with a Lilium in order to innovate and to replace the helicopter. Same innovate, vertical takeoff and landing, safe flight innovate, everything is same. But the regulatory authority says, no, we do not apply the lower security standard of a helicopter. We apply the higher security standard of an Airbus because we think this is better. That induces at least 3 additional development years and at least 1 to 1.5 billion of additional development costs. The main competitors of Lilium, Archer and Joby, get certification in the US from the FAA. And the FAA, of course, said, yeah, this is a replacement of a helicopter. This is 10 to the power of -6 and not 9. And by the way, Lilium has been the much better technical concept. It has been 100 times more secure, not 1,000, but 100 times more secure than what Joby and Archer is doing. So that has been that crazy regulatory decision, which was never challenged, is the root cause why we do not have now the crystallization point of an eVTOL industry close to Munich. And this is going to be big, I tell you. And this is just an example. I can go on. And I can talk about biotech, BioNTech going to the UK. I can talk about European AI Act and the force. The earlier regulation reduces the freedom to operate for innovators, and it increases the cost of experimentation, and it just destroys innovation. This is number 2. Number 3 is actually the lack of growth capital. The concentration of growth implies a concentration of growth fundings. A smaller number of hyper-growth companies nowadays need enormous amounts of capital. Given the speed of growth, significant capital is needed extremely early and very, very fast. As a consequence, we see seed rounds of, hold your breath, triple-digit millions in order to stay competitive. Look at this trend, just recent trends. And these hundreds of millions in seed rounds need to be followed by billions once real growth becomes visible. Just as a side remark, OpenAI has collected close to $60 billion in growth funding up to now. $60 billion. This is an unthinkable number in Europe. Remember, we were failing to find 500 to $1 billion for Lilium. We couldn't find it. The European capital market lacks the ability to provide these amounts, and that is a problem. The very few growth funds we do have in Europe are way too small to write triple-digit million growth checks and still maintain the necessary diversification on the fund level. I mean, currently we are seeking for a very obvious investment case, ESA Aerospace. We're seeking the follow-on funding. And we're talking about significant amounts. But the investment case is so clear, there's almost no downside. And if we think about SpaceX IPO of 1.5 trillion, what I heard, I mean, the upside is infinite. It's still almost impossible for for this very important company, also for the sovereignty of our region, to find European growth capital. One trip in the US, and I don't tell you where, an investor said, I do the entire route. I don't even negotiate about valuation. I do the entire round. I do not want to have any other investor in that round. How crazy is this? I mean, obviously we try to keep it European because it is important for European sovereignty. But isn't it amazing that such a company with such an obvious risk-reward ratio is so difficult to fund? We will get the funding, I'm sure, but it is extremely difficult. It should be done in 2 weeks. So far to the problem diagnosis. But I wouldn't be a venture capitalist if I wouldn't be a structural optimist. So there I do believe good reasons for hope. So let me mention a few of them. First of all, I see a trend which I called from the power of the buck to the power of the brain. What I mean with that is quantum leaps through conceptual innovation becoming more and more likely and more and more frequent. I recall the DeepSeek moment where through an innovative architecture of a large language model, training efforts have been reduced by 100 times. Therefore, conceptual leadership gains relative importance over the power or the pure power of the buck. And that serves Europe well. Sluggish capital allocation has more frequently problems to keep up with the speed of quantum leaps. In other words, it may happen that investments in concepts might already be outdated before they're actually done, because it takes time. I mean, if Sam Altman and Mr. Trump says 500 billion in data centers, it takes years to allocate the 500 billion. And I'm not entirely convinced that that will finally make the difference. At least the jury's out. And if we talk about, and we may talk about that later, we talk about world models and the next generation, what comes after large language models, it might not be the solution to invest these enormous amounts just in data centers. Europe has yet a very strong competitive talent pool. Europe has more students than the US. And it is increasingly attractive to attract top international talent. I like this chart a lot. For the first time ever, the US have become, or is losing more top AI talent than it attracts. So for a long period of time, all the experts were going to the US at the Holy Grail where the innovation is going on. For the very first time since 2025, that has turned negative. Furthermore, we see unprecedented European public investment programs in defense and infrastructure, as we all know, and that does stimulate deep tech innovation. And we do see ample initiatives to create more and larger growth funds, especially on the European level. That is good. It takes time, but it is good. And finally, last but not least, supply and demand, the market does its job. So we do see, for a huge market of 500 million people, an attractive valuation basis, which will hopefully serve investors here to create more outsized returns. So on that basis of hope, the question remains, what can be actually done in order to support it and to accelerate? And let me start with the first reason I mentioned for the non-participation in the growth in Europe, and that has been the lack of ambition. I really advertise the restorage of our European self-confidence. I'm a big fan of them in a different dimension of the statement of Donald Tusk, who said, "Isn't it crazy? 500 million Europeans asking 300 million Americans to protect them from 140 million Russians who are unable to defeat 40 million Ukrainians." I love that. It's not me, it's Donald Tusk. So let's always reach out to the stars. Let's write our winners. Our ambitions cannot be high enough. Yes, we can. Second, I think we have to become really serious in our attempt to deregulate and debureaucratize, especially in the early stage. Let's reduce our cost of experimentation. Let's unlock the creativity we have all over the place with the brilliant minds Europe is able to create. Let's innovate first, let's regulate later, but not the other way around. And last but not least, it is still important to mobilize significant amounts of growth capital. And since we are lacking the root or the main source of growth capital in the US, which are pension funds and endowments, accounting for 75% of the innovation funding in the US. And we do not have these large pools, but we have other pools which we can activate. And these tools are, first of all, institutional investors, so our insurances and private savings. Both pools, by the way, representing just in Germany, new investments of 300 billion annually. This is significant. And it's large enough to pay for all the innovation in Europe we can think of. The question is, how can we get that activated? Because these pools of capital go into low-risk assets for the time being, in bonds and real estate, but not in growth capital. One idea could be to create a large, diversified pool of growth assets, because mathematics tell us that if we have a pool of diversified assets of more than 250 assets, the partial loss risk goes down to zero. And if a partial loss risk goes down to zero, it is easy to get that guaranteed. And I would ask the government to provide a public guarantee for such a diversified pool, because that would contain the advantage that institutional investors, if there is a public guarantee attached, could get into that pool very cheaply, because our self-created regulation of Solvency II prevents institutional investors to go into growth assets, because the necessary or required equity to back up these investments are between 50 and 100% of the investments. That's crazy, especially if you invest in a pool where the partial loss rate is zero. It doesn't make any sense. It's crazy. And everybody knows that Solvency II is wrong. Everybody knows it. But for the time being, we have it, and that keeps institutional investments out of that asset class. And we're talking about 300 billion annually. It's a lot. And furthermore, private savings could be attracted if, as a side benefit, there's a principal capital guarantee, and you have the upside of not just getting 2% for your savings, but maybe 4 or 5 or whatever. And the performance between the expected performance of that pool of 13% and the granted 4 to 5 to the institutions or the private savers could be given to the state as a compensation for the guarantee. So that it would be a win-win-win situation. The state would make money by just applying its solvency. The insurances get another asset class which has a higher yield than just state bonds, and the economy get the desperately needed capital. Just an idea. We definitely should nevertheless start changing Solvency II. Everybody knows it, it's necessary, it will take years, but if we don't start doing it, it will take forever. And finally, I would strongly recommend to get the Capital Market Union done. these would be my ideas to get going. Thank you very much for your attention.
So, thank you, Hendrik. I sent my love to Steffi, I already said so. She introduced me. Obviously, I love fun with facts. You know, we had some great points, but as the title of the conference, it's gonna be wild. So let's get to the action part about how to realize it. And you're speaking about ambition. You're mentioning the ceiling of ambition, and I totally share this with you, that we will not build these big companies if we don't want to build them, truly. But where does this ambition ceiling sit? Is it with institutions, like, for example, universities and other fields? Is it with the founders, or is it with the investors?
I think always start, to clean your house in front of your own door. I think it starts with the investors. And I don't know whether that's chicken or egg, but our venture funds are multiple hundred millions, but not more. So if I find an exit at the Decacorn valuation, I get a distribution of, say, $1 billion. That is 3 times, 4 times the fund, and I'm the king with respect to performance in our fund. I'm satisfied, so the fund is doing well. If I have that same conversation with my fellow investors in the US, their funds are at least 10x as big. So a Decacorn valuation doesn't make a difference for them in that regard. They need a Centacorn exit because they need 10 billion in order to repay the fund. So their incentivation to be even personally successful is clearly we need to grow and get into these high valuations, while us and my fellow investors, we are happy with much smaller numbers, which is a problem. It's not a problem for the funds, by the way, it's a problem for the economy.
Yeah, and let's come, we'll end our conversation exactly with the role of the funds. But let's come to the founders, because an international investor once commented to me and said, it's harder here to find the seriously ambitious founders. No, we would both share that, for example, ESA is a great case, but how much does the problem sit with founders, and what do you as a venture capitalist do, to instill this ambition that they really go for the big ones? They don't go for an exit, but they go for building companies.
Yeah, I think we do have the founders, but the founders are socialized. And if they socialize in a community where everyone talks about unicorn and decacorns, this is the world in which they grow and they live. There are some exceptional cases, especially in the AI space, where founders are increasingly socialized internationally. And the effect of that, what we see is that they actually flee. We have a hard time to retain these founders. Look at Black Forest Labs, for example, which is a spin-out of the Technical University of Munich. There are, to some extent, local patriots, and they still keep a leg in Germany. But in fact, what's happening is happening in the Silicon Valley. And also sad fact, we are an investor in Black Forest Labs, but the lead is done by the Americans, because we have been simply unable to write 100 million of a seed fund, in seed funding. We cannot do it. Our funds are too small. And what I'm saying is everything is so small that the few ones who are really thinking big have a certain incentive to just lose the community and the ecosystem, which is not good.
Yeah, but let's be positive here, because we talk a lot about finance, and we also have to talk about smart finance. But you're making the point in your speech saying it's coming from the power of the buck to the power of the brain.
Yeah.
And we do see that. We do have industries like, for example, quantum, where we're both invested, where Europe is cutting edge. And now we have this very new development about LLMs being questioned, as the holy grail, saying, and you mentioned this, maybe, in a world, in a far future, it's world models, it's Lacan working here and others. Here we could have a chance as Europe because of the power. If you could elaborate on that, and I know you've invested in that field, because I think it might be world models might be a case, where we could catch up.
Yeah, I couldn't agree more. There is so many opportunities to catch up because of the power of the brain, because of the ever-accelerating technological innovation, and you mentioning world models. So at the end of the day, this is a foundational model for physical AI. This is what we call it, a world model. And there, I think the cards are not yet distributed, yeah? And we are an investor in spatial, and there are some other, both European and American companies, but total new game. And we do have the opportunity in that next generation to be on par or even win the race. So it is not so, I think, and it is increasingly not so, that we should be frustrated and given up. Through the conceptual innovation and new concept, we do have the opportunity to make the difference.
Okay, so if we have the opportunity in order to get it, what are the biggest non-linear changes we can come up with? You came up with a fund, which I understand. We have to solve the financing problem. Is there something else that comes to your mind?
I think deregulation. It is unlocking the creativity in the early stage. Let the innovators experiment and come up with great ideas. Let's not limit them in their creativity. And if something starts and getting momentum, let's think about potential negative impacts and then start to regulate, but not at the beginning.
Yeah, and I think this is a general thing, but I think in every single case, like fusion and others, we really have to fight. I know, for example, Francesco Scardino of Proxima is on the other stage. In every single of those cases, we have to fight for a regulation that enables, and not hinders, because it can even be positive
that is a huge problem. Yeah. In regulation. You have 1,000 different regulatory bodies, and you have to address every single one. So you're mentioning the fusion topic. Yeah. Absolutely right. I was given the example of the EASA in the aerospace. And in every single technology, you have your own regulatory structure and body, and it has to be individually addressed. That makes it so sticky and so difficult. But even if it is sticky and difficult, we need to address it.
Okay. Let me finish with one thing I just learned, and I felt like sharing it. As someone who has been a professor for entrepreneurial finance, I do see the role of I couldn't imagine us building a sustainable, healthy ecosystem without venture capitalists who have smart money. And we have tracked this, and we have built industries like we built investment banking has been built a decade before. So, we saw private venture capitalists companies developing, and you're a pioneer in this. We had some few that were growing. That was our hope. And now we're suddenly reaching another ceiling with this generational change. And it's very tough right now to fundraise. So we do see people leaving the market. The group of venture capitalists even getting smaller. So I asked Hendrik, when we had the time to speak before, I said, so Hendrik, how are you, because I'm not that close to his fund, how are you dealing with this generational thing? Because without being too personal, but it's obvious, that you and I have been around for some time, so that the question will arise. I felt your answer was very interesting. I think you should elaborate first on the problem about how you see the industry. Is it even shrinking? Or will it survive and grow? And how is Earlybird going about it?
We obviously have a generational problem in the venture capital industry because, older partners, founders, have problems to incentivize to a good extent the younger partners and let go. We see it in many cases, and LPs do not like to see that, and they then shy away and say, you're 60, 10 years fund, you're 70. Is that for early stage venture the right age? I'm not sure. Maybe I should not invest and rather go somewhere else. Absolutely understandable. So I think venture capital is a professional partnership with should always only belong to the active partners. It is not, a traditional mid-sized company which can I inherit to my kids. So we took the decision to exactly do it. So Earlybird will only always belong to the active partners, and to the extent I reduce my activity, we hand over the company just for nominal value. But it will never be able to be sold because we attached, something to the shares. So if they would ever be sold by anybody, the proceeds will go to myself and my founding partner. So there's no reason to sell it but our younger partners have the obligation then to hand it over further to the next generation and so forth. So the idea is to just keep the entity in a smooth transition in the ownership of the active partners. And it serves for a professional lifetime, and it is, I think, being a venture capitalist is a huge privilege, and I have always enjoyed it, and I still enjoy it. But it is nothing as a professional service firm which you can really give further to,
Yeah, but that way it's growing. And I would like to end on this because I strongly believe that the world gets better if every one of us does something in its own field. And you're surely doing this because what we need, and you have pointed to it, is a very healthy industry to support the founders. And I hope, Steffi, when you invite us back in 5 years, we've seen some companies growing exactly along those lines. Thank you.
Thank you.